Hello and welcome. My name is Wes Peters. I am the CEO of Gold Wealth Management. First of all, I want to thank all of our in-person guests today. Also would like to thank those of us joining us online through our webinar. We have a lot of information to get through today in a 1-hour period. We want to be respectful of your time and try to get that right at an hour. So we're going to move rather quickly here today as we go through this information. And we gave you some pens and paper to take notes with. I would ask that if you please hold your questions till the end. We will answer your questions at the end of the presentation. But I'd like to get started and give you a little bit of my background. So grew up in Michigan on a farm and moved out to Arizona when I was 10. Right out of high school, I joined the Marine Corps. Spent 8 years in the Marine Corps as a mechanic on fighter jets. After getting out of the Marine Corps way back in 1994, I went back to school and I got all my securities and all my insurance licenses and started doing financial planning, sitting down with families, finding out where they wanted to be compared to where they were, how much they'd have to save to reach their retirement objectives, if they wanted to put their kids through college, what that would require. We also had debt cascading strategies to help them get out of debt faster. Because as we know, the thief of wealth is debt. So the faster you can get people out of debt, the more money they can start putting away towards those goals and dreams. So I did that for a number of years. And back in 2009, I had an opportunity to go to work for a precious metals company, selling physical gold and silver bars, coins. And I found out rather quickly that I went from an industry that was very highly regulated, where you had to be licensed, you had to do continuing education, to an industry that has zero regulation whatsoever. It is the Wild West. And I found how people were being significantly taken advantage of, just talking to people who had dealt with XYZ company, and they would tell me what they bought and what they paid for it. And it was like, man, these people stole your money, you know? So I've always been an entrepreneur type and decided that I wanted to start my own precious metals firm and fully educate people. That's what we're all about at Gold Wealth Management. Education, zero pressure. So in 2010, I started Gold Wealth Management, and I built it on the same Marine values that I learned during my 8 years in the Marine Corps: honor, courage, commitment, and service to others. So that brought us to today. We do seminars like this around the valley, around the country, educating people. So we're going to get into this today and share this information with you. Again, we take a zero pressure educational approach when working with families. We do free portfolio reviews. You know, I'm now no longer licensed, but we can take a snapshot of where you are and put together a portfolio to help you get some of your hard-earned money outside of the traditional banking system and the US dollar. How many people feel like we're living in some crazy times right now? Right? Show of hands, there's a lot going on around the world. And so gold and silver are a safe haven investment. And that's what we're going to get into. First, we're going to talk about the why people need to get some of their money outside of that traditional banking system and US dollar. Because if the why doesn't make sense, there's no sense in going into how to do it, okay? Trouble ahead. We've been told to trust the system, right? Your money's safe, your investments are sound, your future's secure. Again, we're living in crazy times right now. We're going to be handing out this report right here. And we're going to go through this very quickly, because again, we do have a lot of information to get through. But at the end, you're going to get a copy of this presentation. And for those of you online, you can request this. We have this in ebook form as well that we can email to you as well. So, but there's 13 building blocks here. And if you look at this picture here, the foundation of our economy is built on $39 trillion of debt. I mean, if our government were a business, it would have been out of business a long time ago, right? They just have the freedom to print and create money out of thin air. So we're going to go through these real quick, but again, you're going to get a copy of this that will go much more in depth. All right, first, record government debt. We have $39 trillion of debt. We're adding $1 trillion every 100 days. This year, we will pay $1 trillion just in interest alone on that debt. Is that sustainable? Something's got to change, right? In 2026, more than $9 trillion of US government debt needs to be refinanced at much higher rates. That's a big deal. So what are they going to do? Quantitative easing. They're going to continue to print money. Block 2 in that report talks about the bond market. Most people think the stock market controls the economy. It doesn't. The bond market does. The bond market's in trouble. We talk about that. To survive, the Federal Reserve's forced to cut rates and print money. Both of those things are good for gold and silver. When they print money, that makes the dollar weaker. They lower interest rates, that makes the dollar weaker. Good for gold and silver. If the bond market breaks, the economy breaks first, and then the stocks fall after. Everything follows the bond market. Stock market AI bubble. Today, the market is more overvalued than 99% of all time since 1925. We're going to touch on how overvalued the stock market is as well. Geopolitical issues and cyber attacks. You look at what's going on in the Middle East right now, right? All markets have been very volatile, right? They don't like uncertainty. And we're not sure where this is going and what's going to happen. De-dollarization. Countries around the world are dumping the US dollar at record levels. They no longer want to deal with the US dollar. Everyone familiar with the term BRICS, the BRICS nations, right? And there are countries lining up to join them, to get on board. We've got Brazil, Russia, India, China, South Africa. And there's over 40 other countries that want to join that alliance where they're no longer settling their business transactions in the petrodollar, the US dollar. They're doing it in their own currencies. Block number 6 is layoffs. In 2025, there were more than 1 million Americans that were laid off. AI is going to be replacing a lot of jobs, right? And it's here to stay. Block 7, commercial real estate. Office buildings are failing right now. Loan defaults are already worse than 2008. In 2026, over $1 trillion in commercial loans come due to refinance at much higher rates. And a lot of these properties have lost value. They won't qualify. Their loan to value rate is so low that they're going to have to change the rules to be able to refinance some of this debt. Block 8, zombie corporations. Remember Mitt Romney and Bain Capital? Before he ran for president, he worked for Bain Capital. They would go in and buy up these companies, make them look great on paper, and then dump them. They'd pull all the equity and everything out of them. In 2025, more than 700 U.S. companies filed for bankruptcy, the most since 2010. Block 9, the banking crisis. There's over $1 trillion in commercial real estate loans that are coming due that, again, just like commercial, they need to be refinanced at much higher rates. Block 10, CBDC, digital ID, and tokenization. How many people are familiar with the Genius Bill, the Genius Law? Write that down and look into that. President Trump passed it in July of last year. That allows these banks and financial institutions to tokenize our accounts, our investments, our real estate. This is just another step towards going to a full-blown digital currency. Here's the part most people don't understand. When we go digital, you can kiss all privacy goodbye. And they can program these digital currencies on what you can and what you can't buy, how much you can spend. They're going to be able to track you, and they're going to figure out pretty quickly if you're a conservative, a liberal, a Catholic, if you like to buy big diesel gas trucks and gas stoves. Maybe your carbon footprint's out of line. You have to pay a carbon tax now. So these things they're already here. The platform is already in place to do all of these things. Systems allow money to be tracked in real time and follow programmable rules. That's what digital is all about. Does that excite many people? It's pretty scary if you really think about it, right? Block 11, the home mortgage crisis. Right now, there are about 875,000 homes that the people that own those homes owe more on it than it's worth. They're upside down in their homes. And the housing market is unfortunately gonna get worse. Household debt has reached a record $18.6 trillion. And a lot of that debt is revolving debt, where these people are just continuing to make payments, and they're gonna be making payments on that debt forever. And the majority of that payment goes towards the interest. Very little goes towards the principal. So it's like a snowball effect. You can't get out from underneath it. At the top, retirement accounts, bank accounts, brokerage accounts. This is at the top of that foundation that's sitting on $39 trillion of debt. And what a lot of people don't understand is when you own stocks in a retirement account, you don't actually own those investments. You do not own them. You're a beneficial owner. Today's market, like we said, is more overvalued than 99% of all periods. If you leave your retirement on the poker table long enough, eventually the house wins. I would write down this documentary by David Webb. He used to be a hedge fund manager. It's called The Great Taking. And it's about 1 hour and 15 minutes long. The whole thing, I recommend watching the entire thing. If you don't want to sit through the whole thing, go to about the 20-minute, 15-second mark, and that's where he'll talk about how you don't own your stocks. You don't own your money when you put your money in the bank. You put your money in the bank, it becomes part of the bank's capital structure. FDIC insurance, we all feel good about FDIC insurance, but with that in the bank, withdrawals can be limited, transfers can be delayed, access can be restricted. We're already experiencing this. We have clients that go to wire us money to buy precious metals, to get out of the dollar and get into a physical, tangible asset, and their banks refuse to wire the money. We have a client here locally that banks with a credit union, and they're right across our parking lot. She sat down with us, did a transaction, walked over to the credit union, and she called me about 10 minutes later saying they were refusing to wire her money unless she showed an invoice. And I said, "Are you kidding me?" She's like, "No." So I said, "Wait there, I'm going to run over." So I ran over with an invoice. They went and got the manager who denied the transaction. And I said, "My client wants to wire money and you're refusing unless she shows an invoice." "That's right." I said, "What if she doesn't want to show it? She doesn't want you to know what she's buying." "Then we won't wire the money." I said, "I have an account here. She has an account here. We're both here. My office is right across the parking lot. We need to see an invoice." I handed him an invoice. He stood there and burned a hole through it for like 3 minutes like he was studying it. And then they wired the money. So more and more of these things are going to continue to happen. Remember this, if you can't move it and you don't hold it, you don't own it. Now I want to talk about 3 charts that if you have a financial advisor, a stockbroker, we have this in a report as well. I would go over this with them. People don't interview their financial advisors or their stockbrokers and see how they feel about things. And you might be shocked. They might feel that everything's always going to be great. It's a market. It goes up and down. It always comes back. But if you're 60 years old, and wanting to retire in the next 2 years, you can't take a 30, 40% hit. If they're really managing your money, they would have you out on the sidelines waiting for the correction, which you'll see what Warren Buffett's doing. And when that correction comes, you haven't lost a dime. You jump in and buy at a big discount. You buy everything while it's on sale, right? We're going to talk about these 3 charts. Think of these as the check engine light on your car, but it deals with your investments. If your check engine light comes on, you're not going to continue to drive that car for another 1,000 miles. You're going to get it in and check out what's going on, because it might be a $100 problem that you could very easily turn into a $1,000, $1,500 problem. These are the warning lights for the stock market. The Shiller PE ratio, price to earnings ratio, is referred to as PE ratio. This is how much you have to invest to earn $1. A normal PE ratio is anywhere between 15 and 18. It costs you 15 to 18 bucks to make $1, okay? Extremely high PE ratio is anything over 30. You have to invest $30 to make $1. In 1999, the dot-com bubble, the PE ratio hit about 44. The NASDAQ fell 78%, S&P 500 fell 49%. Today, the PE ratio is over 40. In over 150 years of market history, this has only happened twice, 1999 and now. You don't hear about this in the news, do you? You hear, every once in a while you hear them talk about maybe the market's overvalued, right? But they don't really break it down for you. Great question for your financial advisor. Are you concerned about the stock market being overvalued right now and where these PE ratios are at? See what they say. The Buffett Indicator. This is another great indicator that the market's overvalued. This compares the total value of all stocks to the size of the U.S. economy, the GDP. Total value of all publicly traded stocks divided by the gross domestic product. Historically, anything under 100 is healthy. That's a healthy market. Extreme overvalued market is anything over 150. The dot-com, it peaked at 150. Today, we're sitting at 220. You think that might be why Warren Buffett's sitting on $382 billion in cash right now? I saw an interview with him, and the person conducting the interview said, this isn't like you to be sitting on so much cash. Berkshire Hathaway is usually, movers and shakers and all these different investments. Why aren't you in the market? And he said, we wish we could find somewhere right now where the risk was worth the reward. So what do you think Warren Buffett's doing? He's probably waiting for things to go on sale, right? He's not predicting a crash, he's pricing one in. Last of these three indicators, the margin debt. Margin debt is money that is borrowed, leveraged to be able to put into investments, stocks, mutual funds, bonds, real estate, what have you. It's kind of like fractional banking. A bank has $100, they can loan out 1,000. Fractional investing or margin debt, they put up $1,000, they can invest $10,000. And it works great when the market's going up. Without a whole lot of output, you can have a lot of investments and do very well. But the problem is when those investments go south and start crashing, they get things called margin calls. If you want to hold these positions, you need to send us more money or lose everything. And that's kind of what's happened recently, and we'll touch on that. So people scramble. So margin debt is a big deal. As of December 2025, there was $1.23 trillion of margin debt. Three different measurements, lenses and ways to look at the market, and all are saying the same thing. Do some research, and you might want to sit on the sidelines, even if it's for 12, 18 months to see what happens, rather than taking a big hit. Does that make sense? We believe physical gold and silver exist for moments exactly like this. This is why people get some of their money out of this traditional system and into physical gold and silver. And I really want to talk about what happened, because gold and silver are a safe haven investment, right? But if any of you have been following the market, as soon as the conflict in the Middle East broke out, gold and silver started going down, right? Pretty quickly, pretty significantly from its previous highs. And that's to be expected, actually, if you look at the big picture, if you step back and just analyze things. So the U.S. military escalation in the Middle East disturbs the global supply chain, right? All the oil. The oil is the engine that drives the global economy, right? If oil goes up, everything goes up. Not just the price of gasoline, food at the grocery store. All that is an inflation tax on you and I and people around the world. Everything is going to cost more money. And this caused sharp moves, like I said, across the board: stocks, bonds, mutual funds, and physical gold and silver. But if you look at the big picture, markets are reacting emotionally, okay? Metals are reacting temporarily. The fundamentals remain the same. We still have $39 trillion of debt. The Federal Reserve is still boxed into a corner where they have no choice but to turn on the printing presses and create money. They're going to at some point here, going to have to start lowering interest rates. Printing money, lowering interest rates. And when those rates go down, money is going to start fleeing CDs and the US dollar and treasuries that will pay them a higher rate right now. But when those rates start going down and that inflation kicks in again, that money is going to be leaving these other investments, CDs, money market accounts, and it's going to be looking for the next place to go, and it's going to be heading into the precious metals market. So the dollar, what's going on right now, the dollar's gotten stronger. And honestly, if you think about it, that's like saying that's the best looking horse in the glue factory, so to speak, right? We have $39 trillion of debt. They're just going to keep printing money. But globally, the dollar's getting stronger. A strong dollar is not good for gold. Algorithm trading. When the market started going down, there are a lot of stop losses automatically programmed that if it hits this point, sell and cut our losses and get out. And it's like a chain reaction. And with this high frequency trading and algorithms, there's huge overreactions because it's not someone sitting there doing it, it's the computers, right? So that's a big thing. All these margin calls, big hedge funds, big time investors, like I said, they get these, you need to send us more money. And one of the easiest assets to liquidate is gold and silver. Very easily. You can settle that faster than you can. Some of these investments take 3 days to settle. They have to scramble and look anywhere they can to sell, and that's one of the big things. And also, just prior to that, when gold and silver were at all-time highs, there was profit taking. There's an old saying, you don't go broke taking profits, right? And that's what people were doing as well. So it's like the perfect storm. It was a combination of things. Again, gold and silver's price in US dollars. Dollars surged and investors rushed to safety. Strong dollar, short-term pressure on precious metals. Gold pays no interest or dividends. Rising treasury yields makes that money leave other areas and go into US treasuries. This reduces demand temporarily. Again, when people need liquidity, it's not, they sell whatever they can. The easiest things to raise that capital, to raise that cash. This happened in the 2008 financial crash, 2020 COVID crash, and now. People need to really look at this. Again, if you like buying things on sale, buy low and sell high. That's the saying, right? So potential next moves: if the war continues, inflation increases, central banks intervene, increasing the money supply. Currency instability rises. This is bullish for gold and silver. Analysts still expect the price of gold and silver to go up in 2026 from its previous highs. Again, big picture, fundamentals haven't changed. Global debt is at record levels. Stock market significantly overvalued. Ongoing currency debasement. You look at BRICS and these other countries. Central banks are still buying gold. Inflation pressures are rising. Geopolitical instability. The Fed is going to print money and lower interest rates. So ask yourself this: if the market were to fall 30, 40, 50%, and you were aware of this information and you really decided to do nothing, that's going to be pretty painful, right? So if you're invested in the stock market, I would look at where you are and come up with a strategy that's going to, help you preserve your wealth and maintain what you have. Central banks, the people that control money, this is something to always think about too. If the people that control money are dumping the US dollar and replacing it with gold, we should probably investigate why. Why are they doing that? And, they do it for a safe haven investment. But I think one of the biggest things is that a lot of people aren't aware of is gold used to be a tier 3 asset. By being the dollar's a tier 1 asset. When gold was a tier 3 asset, if a bank, company, anybody held gold, physical gold, let's say they had $20 million worth of gold and they counted as an asset. When it was tier 3, they could only count half of that value on their books as a true asset. So now they can only count 10. Gold has now become a tier 1 asset on par with the dollar. So if they have 20 million of gold, guess what? They get to count all 20 million. What would institutions and banks rather hold long term? Fiat currencies that are just going to lose purchasing power and be devalued? Or do they want to dump those fiat currency dollars and get it into gold, which is going to maintain its purchasing power? Here are just some headlines from April 2nd. Central banks, gold statistics. Central banks stay the course on gold in February. Central banks remain net gold buyers in February despite rising geopolitical uncertainty. Gold's floor strengthens on central bank demand. Central banks keep buying gold as de-dollarization accelerates. Central bank gold buying rebounded in February. Again, these are the people that control money around the world. All right, so that's all the why stuff. All that stuff's out of the way. Now we're going to get into what you need to know if you're getting into the precious metals market, buying physical gold and silver. Anyone familiar with the term spot price?
Yes.
Okay. Spot price is the cash or market price on the commodities exchange, the price where traders can make over-the-counter trades with each other in the futures market. Now, can you buy physical gold and silver at the spot price, the paper price? No. Doesn't include the cost of turning it into a bar or a coin. There's, the shipping charges, things like that. So when you buy, you typically pay over the price of spot. And years ago, when gold would move $15 in a day, that was a big deal. Now we're seeing $100, $150 swings sometimes, right? It used to be you could buy physical gold for just a couple percent over spot. People write, what do you charge over spot? I'm telling you, the difference between that spot paper price, which is manipulated on Wall Street by Goldman Sachs and JP Morgan, and the physical buying price, that spread is going to continue to grow. Because people that have physical metal could care less what the COMEX, the exchange, and these folks say the prices of gold and silver is on paper. They're selling gold and silver on paper that they can't even deliver. It should be illegal. And some of these inventories in physical metal are starting to get hard to find because so many people are, again, transitioning some of their wealth outside the traditional system. So that's the spot price. Everyone familiar with ask price, what that means? Ask price in investing is the price you're paying to buy something. Okay? Bid price. The bid price is what you would receive from the market if you were selling. Okay? When people go to buy gold and silver, they don't know the right questions to ask. And we give you those questions, whether you ask them or not. Most companies love when they hear somebody say, I know nothing about this. They're like, perfect, you're in the right hands. And they don't educate you on this. When you go to buy anything, even a vehicle, a new vehicle or whatever, you say, okay, and you don't put all your cards on the table at once. What would this cost me to buy it today? Well, if you're buying this, it'd be $1,000. Okay. You got your answer. Then turn right around. What if I were selling this to you today? What would you give me for it? Oh, the blue book value is, the thing has 0 miles on it. I drove it around the block and brought it back, So the bid price, you paid $1,000, but if you were buying it from them today, they'd only give you $850. You know what your true cost of that purchase was then, right? That $150. So ask price, what you're paying to buy, bid price, what you're getting when you're selling. 2 very important things you need to know. What drives the price of metals higher? Again, weak dollar, inflation, supply and demand, de-dollarization, geopolitical tensions. All of these things are what's going to drive gold and silver higher. All right. Some people may talk to their advisor and say, well, we've got you invested in gold and silver. Okay, well, do you have it in your possession? Are they storing it at a depository somewhere? Oh, I don't know. Well, if you bought gold and silver through your advisor, you probably bought an exchange-traded fund, an ETF. ETFs, GLD, SLV, those are great to speculate. If you just want to make money, buy GLD or SLV. You could buy it this morning. Silver's up 5% by 1 o'clock. Sell it, you made 5%. You can get in and out. But it's no form of protection. It's no form of insurance. You're still tied to the US dollar. It's not getting any of your money outside the system. So we've got buying it on paper, ETFs. Here's a list of other ETFs, popular ones, GLD, GLDM, IUA, GDX. There's a bunch of different ETFs out there that you could buy. They're invested in futures contracts, paper. Physical gold and silver. This is your backup plan, your emergency plan. This is getting your money outside the system. When you have physical, tangible, liquid asset. Bars, coins held in your possession, hedge against inflation. Gold and silver will be the last asset standing. They have a long proven track record. I think gold's mentioned like 416 times in the Bible. So again, it has that track record, 3,000-year history. 417 times, it's right there. Silver's mentioned 320 times. Gold has no counterpart risk such as a bank or financial institution to default, like they can on an annuity or an insurance product or some type of other investment. No paper contract. Gold and silver are the only financial asset that is not someone else's liability at the same time. It's the only one out there. Can't be hacked or erased. Fraud and cyber attacks and hacking are a big, big deal, right? And it's only going to get worse. And these thieves, these online thieves, stealing your all your private information, your identity, it's becoming a big issue, and it has been for some time. So with physical gold and silver, there are certain products that have no 1099 on the purchase or the liquidation. Totally get some of your wealth off grid on the sidelines. Okay. It's liquid and portable, quicker and easier to liquidate than most Wall Street investments. I mentioned this before. When people get margin calls and stuff and they need money, it's one of the easiest assets to sell. You can easily travel the world with gold and silver. I have a client in Illinois. He's done a lot of business with us over the years, and he owns a bunch of different companies, and he hates shipping stuff through the FedEx or the post office, even though it's fully insured. And he's been a really good client, so he needed to liquidate $300,000 to pay cash to get some work done on one of his businesses, some construction stuff. And the contractor said, if you pay cash, I'll knock off 10%. So I bought a plane ticket, flew into O'Hare, met him outside security, went out to his vehicle, counted out $300,000 worth of 1 ounce, $20 gold pieces, gave him a receipt, put him on my backpack. It was kind of heavy, not too bad. Went through security. I got flagged. I asked for a private screening. Went in the little room, opened it up. They're going through like, "Oh, what is this?" I'm like, "Well, this used to be money. This is the type of coin Wyatt Earp would have put on a bar top and ordered a shot of whiskey with." And usually they want a business card. You know, they want to learn more about it. And got back to Phoenix. And about 2 weeks, 3 weeks later, we were doing a survival show in Springfield, Missouri, and I was taking a bunch of silver. I had about $6,000 worth of silver I put in that backpack, and it weighed more than that $300,000 worth of gold did. So you can travel with gold and silver, and if you ever are anything that, you know, just ask for a private screening at the airport so they're not pulling all your stuff out in front of everybody. Again, when you get physical metal, diversification hedges your stock market investments. Use Wall Street to make money, and use gold and silver, like I said, as your insurance and your backup plan. If you don't own physical gold and silver, you're not truly diversified. Whether you buy it from us, buy some from somebody. Any investment you can name me, stocks, bonds, mutual funds, annuities, real estate, with those investments, you're tied to the dollar, okay? When you have your gold and silver on the sideline, you're not tied to the dollar, because guess what? Every country in the world recognizes its value. You could be anywhere in the world and exchange it for that local currency. Here's why you own gold and silver. In 1920, 250 of those $20 gold pieces would have bought you an average home. Average home back then was about $5,000. And this is actually a little outdated. In 2025, 250 of them are worth over $1 million and would still buy you a nice home. And it's not that gold has gone up that much since 1920. That's how much purchasing power the dollar has lost. I mean, that's pretty powerful, right? If you and I today had $10,000 of cash and $10,000 of gold or silver, and we put it in a safe, and we decided to come back here 10 years from now, and we open that safe, number one, the dollar's not even going to be around 10 years from now, right? But even, let's say it was, it's going to be buying you a lot less than 10 years. Guess what? That gold or silver, whatever it was buying you today, it's going to buy you 10 years from now. And again, that's why central banks are offloading those dollars, converting into physical metal. All right, when we're buying physical gold and silver, it is a lot less complicated than investing in stocks, bonds, and mutual funds where there are thousands of choices. There are some key things that you do need to know, which we're going to share with you. If you want to buy physical metal, the most affordable way to buy physical metal is to buy bullion. And the most affordable way to buy bullion is to buy bars. Bars from 1 ounce, 5 ounce, 10 ounce, 20 ounce, 50 ounce, 100 ounce, 1,000 ounce bars. Okay? You buy these bars. Then you can buy what's called rounds. A round is typically a 1 ounce coin, whether it be gold or silver, that has any design on it. It could have Donald Trump's face. It could have anything, any type of animal, you know. It could have Kamala Harris's face for the other side, right? So rounds are the second most affordable way to buy bullion. Bars number 1, rounds number 2, and then coins from other countries. Krugerrands, pandas, maple leafs, roosters, philharmonics. These are all foreign coins from other countries. What you need to know about bullion is it's simply worth the metal content. They're 0.9999, okay? Basically pure. Now, the thing you need to know about bullion, one of the things you need to know is certain products can generate a 1099 to the IRS, can be reportable, okay? Could be confiscated. A lot of companies talk about confiscation. Back in 1933, President Roosevelt confiscated gold. He gave people $25 an ounce for their gold, and within a couple of weeks, our government turned around and was selling that same gold to other countries for $35 an ounce. Not saying they're going to do that, but it's something we point out. I don't think they're going to go knock on people's doors and say, hey, we know you got gold and silver, give it to us, but anything's possible. I've had people say, what if they show up on my house with a metal detector and they're scanning my walls? And then, well, things have gotten pretty bad then, But so we bring that up, confiscation. Now I want to show you some examples of U.S. minted coins, the popular coins minted by the U.S. Mint today. All right, this is the gold buffalo coin, beautiful coin. First released by the U.S. Mint in 2006. It's designed after the 1913 buffalo nickel. Available in 1 troy ounce, 24 karat. Its face value is $50. So this is a popular bullion coin. So we got bars, rounds, foreign coins, and currently minted coins by the U.S. Mint. Okay, these are all bullion. One value, 0.999. By far the most popular coin minted by the U.S. Mint is the gold eagle, American Eagle, gold and silver American Eagles. Authorized under the Gold Bullion Coin Act of 1985, first released in 1906. It's a duplicate of the 1907 design of the $20 gold piece. These are available in 1 ounce, half ounce, quarter ounce, and 10th ounce coins. The buffalo is only available in the 1 ounce. These, you have some options, 50, 25, 10, and $5 coins. The silver eagle, same thing, designed in 1986, designed after the 1916 Walking Liberty half dollar, 1 troy ounce. The silver coins were only made in the 1 ounce. They weren't made in the fractionals, the smaller coins. So that's bullion, right? Again, bars, rounds, foreign coins, currently minted coins, one value, 0.999, could generate a 1099, could be subject to confiscation. So that's what you need to know about one of your options, bullion, okay? The next option is a numismatic coin. A numismatic coin is a U.S. minted coin minted prior to 1933. These are coins that were money, okay? These coins have 2 values. They're not only worth the gold content or silver content, but they can have an intrinsic value, from a very low intrinsic or collectible value to something where the intrinsic value is worth more than the ounce of gold or coin, some very rare coins. I held a penny in my hand, a birch cent, that sold at Heritage Auction for $2.6 million. So there are very rare collectible coins, and we're not looking to turn people into rare coin collectors. I mean, we do have clients that they are collectors, but most of our clients, we're looking to get them the biggest pile of metal for their money, okay? The best value at the time. Benefit of 2 markets, and they don't make these anymore. What there is what there is, because there's no 1099 on the purchase or the liquidation. No matter how many you buy or sell, you buy these. When you buy them, I don't need to know anything about you other than, do you want us to deliver these? You want us to pick them up? You want us to ship them to you? Where do you want them shipped to? Discreetly packaged and shipped, registered, and insured. When you sell it, I don't need a social security number, date of birth. I don't need to know anything other than where do you want the check sent. A lot of people, with what's going on nowadays in the redistribution of wealth, people are looking for privacy. Not subject to government confiscation because they're considered a collectible. So that's a numismatic coin. Here's an example, a $10 Liberty Gold coin. This used to be used just like a $10 bill. You can see over time, they were minted from 1795 to 1933, and over the course of history, they had some design changes, which are highlighted there. This is in one of the pieces of information you're going to get. It was minted also in a $5, which is a quarter ounce, and a $2.50, which was a 10th ounce coin. Then they decided, probably due to inflation, we need a bigger coin. So they decided to make a double eagle. The $10 is an eagle. This is the double eagle, twice the size. It was worth $20. It was minted from 1849 to 1907. And again, you can see the design changes there. The $20 Liberty was then replaced by the $20 St. Gaudens, another design change, okay? It was minted from 1907 to 1933, and then they made a commemorative in 2009. Designer was Augustus St. Gaudens. Design date was 1907. Now, one thing about numismatic coins that I forgot to mention, compared to bullion, bullion's 0.999, correct? Almost pure. These coins that are numismatic, they were out in circulation, they couldn't be 0.999 because they wouldn't have been durable enough. They would have worn down too quickly. So any numismatic coin does have 10% copper in it. So it's 90% gold or silver, 10% copper. Now they are considered 1 ounce coins, or if it's a ½ ounce coin, because no one in their right mind would melt those coins down to separate that metal. But they are 90% gold or silver and then 10% copper. Some people consider this coin the most beautiful coin ever struck. And when they made the St. Gaudens, they didn't make it in the ½ ounce, ¼ ounce, or 10th ounce. So there were no $10, $5, $2.50, just the 1 ounce $20 gold piece. Morgan silver dollars. Again, this is the kind of coin Wyatt would have put on a bar top and ordered a shot of whiskey with. Minted from 1878 to 1904, and again in 1921. 90% silver, 10% copper. And then the Morgan silver dollar was replaced, redesigned by the peace dollar. Same metal content, 1 ounce, minted from 1921 to 1928, and then again in 1934 and 35. Walking Liberty half dollars, minted from 1916 to 1947. Franklin half dollar, minted from 1948 to 1963. And then in the industry, we call this junk silver, dimes, quarters. Dimes were started being minted back in 1796. Nickels were minted from 1942 to 45. They only have 35% silver. So stuff like this, dimes, quarters, half dollars, anything pre-1964, before you go digging through all your old change and everything, if it's 1964 or older, it would have the silver content that you're looking for. So again, I told you this is a lot less complicated than investing in stocks, bonds, and mutual funds. But these are the things you need to know. And here's something that happens in the industry is everyone's going to talk to you about why you need to get some of your money outside the dollar in the stock market. And when you get on board, a lot of these companies then want to be the expert and they want to tell you what to buy. And let me tell you how they determine what you should buy. They pull up their inventory, they take a look and say, what do we have too much of right now that my sales manager is paying me more money to move and get off the books? And they might say, oh, you should buy these 1 ounce South African Krugerrands, great gold coin, very popular. And you're like, okay. And you buy them. They didn't tell you when you go to sell those, it's going to generate a 1099 to the IRS. We feel like that's something important that you should know. So just like we went through bullion and numismatic right now, we explain all the products. You're going to tell us what you want to buy based on your situation and what you're trying to accomplish. And we'll say, okay, if that's what you want to buy, here's how much those cost. So you're going to determine, you'll have the information to determine what you want to buy. So this is like walking down a path, you come to a dead end. And you say, do I want to go left and just focus on getting the biggest pile of metal for my money and buy bullion? Or do I want to go right? I like the idea of these numismatic coins. They don't make them anymore. There's periods of time where they could get harder to find. So that premium could go up on them, which would benefit me. I'm not just relying on the gold and silver market. That's totally up to you. Whichever way you want to go, then we say, okay, let's focus on those products now. Here's what's, here's, again, we'll go through all the different products. And you can diversify a portfolio in gold and silver as well. Do a percentage of gold, percentage of silver, maybe some $20 gold pieces, maybe some, ¼ ounce gold pieces, whatever. So we can diversify as well. So that's kind of what it is. When you come to this dead end, bullion or numismatic. Graded certified coins, we'll touch on this. So there are two companies in our industry that everyone recognizes and respects. They grade coins. They look at them under magnification. They're looking for nicks, dings, blemishes, right down to how well was this coin struck when it was minted. And they assign it a score, which is called mint state. The holder will say MS. This one says PCGS, that's who graded it, MS63. At the top right, it's a $20 gold piece. The top left, it's an 1855 coin. S stands for San Francisco Mint, where it was minted. This is a tamper-proof case. You'd have to physically break it out. Has a serial number on there. So this is this coin's DNA, right? Professional Coin Grading Service. They've graded 42.3 million coins, metals, and tokens valued at over $36 billion. NGC, Numismatic Guarantee Company, founded in 1987. They've graded more than 50 million coins. So if you're buying graded certified coins, you don't want to buy from some mom and pop grading company. You want to deal strictly in PCGS and NGC. And what we do is we look for value. Like this coin right here, this $20 gold piece, if we're looking and we're talking about buying a circulated gold piece, $20 gold piece, and I look and I see, hey, we can get an MS62 for only $60 more per coin. You're jumping over 60, 61 and getting into a 62 for $60 more. If I were spending my money, I would buy that graded certified coin because it costs $25, $30 just to get a coin graded. So there are times where there's values where a lot of times it's just the circulated coins and we don't sell any junk. Everything we sell is we stand behind. It's all sightseeing. But we might pick up some graded certified coins if it's a good enough value at the time. All right, precious metals IRAs. Yes, we can help you protect existing IRAs or 401ks with physical metal. It takes about 7 to 10 business days to do the process. I'm going to talk about how we can set this up for you. It's very easy to do. You have some flexibility with a precious metals IRA. At age 73, our government starts making you take money out of a retirement account. It's called the Required Minimum Distribution, or RMD. My clients that have a precious metals IRA, if they don't need the money, we can have that amount of gold and silver shipped to them to satisfy that RMD. If they could use the money, we'll sell some gold and silver and send them a check to satisfy it. I have clients that did precious metals IRAs 12, 15 years ago back when they were working. They have since called me and said, hey, Wes, we've retired. We're living on a pension, Social Security. We need an extra $1,200 a month to pay the bills. We'll typically sell 3 or 4 months worth of their gold and silver at a time, leave it in a cash position in the IRA. They let me know what day of the month they want that $1,200 to hit their checking account, and like clockwork, it'll be deposited in their bank. About 3.5 months later, we sell another 3 or 4 months worth to keep those funds liquid to pay that out to them. This is a little different than with savings. With savings, when you buy, you give us money, we give you gold and silver. You take possession of it, you hold it. When you need to sell it, you call us, we'll buy it back from you at whatever the value is at that time. We have a two-way market. With the IRA, there's 3 companies involved. First company is our company, Gold Wealth Management. We're obviously the metals company. The second company is a trust company. These are the paperwork people. We use Gold Star Trust Company out of Amarillo, Texas. They've been around since 1989. They have over $3 billion in assets, over 60,000 customers. This is who we would fill out an application from to open a new IRA through Gold Star. To sum them up in one word, they're the snitch to the IRS. They let Uncle Sam know when you're putting money in, and when you're taking money out, they're the ones that generate the 1099. So I help you fill out their application. We submit it 7 to 10 business days. The money shows up in your new account. The money goes to Gold Star. They release it to us to help you buy gold and silver. When you sell, you deal with us. We cut the check. We do not send the check to you. We send the check to Gold Star, and they forward the payment to you, whether it's ACH, they have your account information to deposit it, or they send you a check. But we would always be your point of contact. But Gold Star is who the account would be set up through. They're the paperwork people. We have folks that deal directly with a couple of their people. So if we typically have a question, we have an answer back within a couple of hours. So this is Gold Star. Because this is an IRA, I cannot send the physical gold and silver to you. If I did, I would get you in trouble with the IRS. They would consider it a distribution, a taxable event. Because you have that gold and silver, and 2 years later, you decide you're going to sell it to a family member, a friend, a neighbor, whoever. They're not going to let the IRS know that you just liquidated that metal. How's the IRS going to collect their tax money, right? You got to pay your fair share, right? We will not store your metal for you. You never want a company you do business with to store your metal. That's a big conflict of interest. This company, Delaware Depository in Delaware, is a state-of-the-art facility in mini Fort Knox. We ship them physical metal, whether it be bars or coins, bullion, numismatic. They're about to sign off responsibility for it. So they're going to make sure it meets all quality standards. So it meets all quality standards. They sign it in. It sits in their vault. And at any time, you could say, send me my gold and silver, or sell it and cut me a check, both taxable events. The nice thing about Delaware is they're insured through Lloyd's of London, the largest insurance company in the world, for up to $1 billion per incident. So if that place burns to the ground or gets robbed, they will cut you a check to replace it. I also like that they have an on-staff auditing team that throughout the years auditing accounts and products and everything. But what I like even better is every November, a third-party company goes in there that has nothing to do with them to put eyes on it and verify everything as well. So that's Delaware. Gold Star has a one-time fee of $50 to open the account, and then the annual fee to store the metal at Delaware to have it insured through Lloyd's of London, and for them to do the quarterly and annual statements is $190 a year. Very reasonable. And again, it is not a paperwork transaction. It is physical metal sitting there with your name on it, whatever you decided to purchase. Now let's do some common questions. How will you use your gold and silver? I can't take it to the grocery store and buy food. I can't go to the gas station and put fuel in my car, which is true. And I don't think we're going to get into a barter situation in our lifetime. Anything's possible. But you have your gold and silver on the sidelines. Everything else you have is automatically converted digitally. Brokerage accounts, bank accounts, retirement accounts, everything's on the grid, on a ledger. My clients can convert their gold and silver as they need it on their terms. And we will be cutting them a check based off of whatever currency we're dealing in at that time. If it's still the dollar, we'll cut them a check based on dollars. If it's Bitcoin or something else, we'll cut them a check on that. So they've got this, again, off-grid on the sidelines that they convert it as they need it. Why is it more than likely that my financial advisor is going to tell me you don't want to buy gold and silver? You'll hear things like, it doesn't pay dividends, it's an old relic, you can get a higher rate of return. Again, you're not doing this to make money. Use those other investments to make money. This is your insurance policy. And when they hear you say you're thinking about buying gold and silver, they hear one of two things. Either you've got more money you could be giving them to invest, or you're thinking about taking some of the money they're currently managing and moving it elsewhere. They don't sell it, so they don't like it. And again, if they say you're in gold and silver, if you don't have physical metal somewhere that they will ship to you, you're speculating. You have no form of insurance. And I also tell people, does your advisor really manage your money? I remember after the 2008 crash, I would be talking to people. Did your advisor call you in advance saying that they're concerned, we need to make some changes? No, Wes, I never heard from them. I got my statement, so I was down 30%. And when I called them, I got the same old, oh, don't worry, it'll come back. The market runs in. And it did eventually come back, right? But it doesn't happen overnight. Gimmicks in our industry. Ask me how to get $15,000 of free gold and silver, your bonus gold and silver. And I think they've raised it to 20 now. I assure you, no one in this industry is giving anything away. I'm going to tell you real quick, I like sharing real life experiences, how you get $15,000 or $20,000 of free silver. I have a client in Florida. She has a very nice seafood restaurant right on the water in Florida. She goes to lunch occasionally with one of her college girlfriends. They remain friends all these years. They go to college, it comes up, this lady tells my client, I bought a bunch of silver yesterday. And she said, oh, I wish I would have known you were looking. I would have had you talk to my guy, Wes, in Arizona. You should probably call him anyway and tell him what you bought, what you paid, and he'll let you know if it's a good deal or not. So next day, a lady calls me and tells me that she wired $300,000 to this company to buy some 1-ounce silver rounds. She told me their whole thing was they guaranteed me that nobody else in the industry had these coins. Can't get them anywhere. They don't even have them yet. I'm not going to get my silver for like 6 weeks. I'm like, they got your money already and you're not getting it for 6 weeks? Yeah, I had to secure it. She wired them the money. And what they failed to tell her is all this company did was have a mint make a special coin for this company, a 1-ounce coin, that if she went anywhere to sell it, they could care less about this special coin. At the time, silver was right at $31 an ounce. She paid $66 an ounce for these coins. They turned her 300 grand into 150 like that. I said, here's what you need to do. You need to call them tomorrow and say, I made a mistake. I've done more research. I'm not ready to do this. I want my money back. And if they don't, start saying things like, I'm going to call your state attorney general. I'm going to call the Securities and Exchange Commission. And 2 days goes by and she called me. She said, well, Wes, they sent my money. They're sending my money back, all but like $1,200. I said, well, she said the market had moved, had gone down. So I would have told her, no, tell them you want your $1,200, but she was happy to get back what she did. And I sold her a coin. They sold her for $66. I sold her rounds for $31 a piece. So she's and there's stuff going on like that like crazy. And the unfortunate thing is, a lot of these conservative talking heads on radio and TV are sending their viewers and listeners to the wolves. And these people are getting raped. I have a friend that worked with a company that Michael Savage was their person. I know the kind of money that these guys are making pitching these companies. And all of that cost is being passed on to the client. And we don't have that overhead whatsoever. We don't do anything like that. Another example real quick. Couples dealing with this company, the advisor, they said, well, obviously you don't do this for free. How much do you make? And he said, I make 4%. And they said, okay, that's not too bad, 4%. They did business. About 6 weeks later or so, they realized they paid way more than 4% after they learned more and did some research. They called the advisor back and they said, hey, before we did this, we asked you how much you made. You told us 4%. We did the math and we paid way more than that. And without missing a beat, the advisor said, you didn't ask me how much this was going to cost you. You asked me how much I made. I told you how much I made. They got a manager, and the manager said to them, well, folks, he didn't lie to you. You didn't ask the right question. You asked him how much he made, and he told you. You didn't ask. And they paid, it was like 22% is what they paid. Big difference between 4 and 22. And the thing is, the guy knew what they were getting at. He knew what they were asking, but he's going to punish them for not knowing the right questions to ask. We don't do that. Another one. Someone does business with the company 2 years ago, a year ago, they call them and say, hey, I was just curious, what's my portfolio worth today? And they'll say, oh, if you had to buy that, let's say they invested 10 grand. If you had to buy that same portfolio today, it would cost you $14,000. And they think, oh, okay, we're heading the right direction, we're doing good. It's not what you want to know. Well, I'm not buying it. I want to know if I were selling it to you today, what would you pay me? Oh, if you were selling it today, it's worth $9,000. So there's still $1,000 down. But they gave the if you bought it today line. Just little things like that. I could go on and on. Again, both gold and silver are going to go higher. The fundamentals haven't changed whatsoever. Silver, there's been a shortage on silver since 2021. 796 million ounces or 24,700 metric tons. So the silver demand is there for sure, the shortfall. And what's going on with the US dollar and is going to continue to go on is gold is no longer looked as a commodity. Gold is looked at as the ultimate currency around the world, especially now that it's a tier 1 asset. At the end of the day, it comes down to privacy, preservation, and protection. Privacy, preservation, and protection. And that's what gold and silver offer. It's the 3 pillars of wealth. At current prices, the precious metals market is on sale. Buy the dip. Would you rather be buying silver when it's over $120 an ounce or be buying it today? Would you rather be buying gold when it's over $5,000 an ounce or be buying it today? The fundamentals haven't changed. The market is going to go higher. Why choose Gold Wealth Management? Again, we practice the same marine values: honor, courage, commitment, service to others. No games, no gimmicks, no BS. Full education. We take great pride in customer service. We go above and beyond. No gimmicks. And we have very, very competitive pricing. It's very hard for someone to beat our pricing, even these online places, again, because we don't have the overhead. So if the why makes sense, I would encourage you to schedule a free, no obligation educational call, or come by our office, or we can come by your house, or we can meet somewhere for those of you that are here in person. Let's get together and talk about your questions, your concerns, all of that, and see if your situation, what makes sense for you. Because like I said, it's time to get some of your hard-earned money outside the traditional banking system. So I appreciate all of you taking your time to come in today. In closing here, I'd like to thank all of you, thank all of our online viewers as well. And we're going to be walking around during lunch. They're serving lunch right now. We're going to be walking around, John and I, taking your questions and answering those for you. And for those of you online, we'll have advisors in the chat where you can go and get your questions answered on the chat as well. We'd look forward to talking with you. So with that said, we want to thank all of you once again, and let's enjoy lunch. Thank you.